what are the key impactors of cap rates? What impacts it?
Well, let me back up for a moment if I could, because there really are only two risks in the real estate business. One is traditional real estate risk, and the second is what I call operational risk. Now, real estate risk is when you have a tenant, you've underwritten the tenant. Are they going to stay for their full term, meaning is their credit good? And will they then renew in your building afterwards, and what that's going to cost you? That is traditional real estate risk. You know what operational risk is? Everything else that it takes to run your property. And that operational risk, what's been happening today is operational risk has been going up. And why is operational risk going up? As I give an uppercut to you metaphorically out here on the phone. It's been going up because in certain asset types, leases have gotten shorter. In certain asset types, operations in the building have gotten more complicated, particularly in the office space. When you see the rise of co-working space, those leases they could be 1 month long versus being a traditional 5 or 10 year lease in the space. So that's one risk. The second is people now need to spend more money on common areas to quote unquote activate the building. So traditionally, common areas might be a expense of, say, just use rough math, 10% of the cost of running a building, just to use rough math. Now it might be 15% if you need to have better common areas with better amenities in order to attract and retain the best tenants. And so this operational risk is also going up because many people are now creeping into what I call alternative asset classes. What does it mean to go from a major asset class to an alternative? I'll tell you what it means. If you go from a suburban office building to a medical office building, they may look like to the average person that they're the same on the outside, but they are not. It costs a lot more to operate a medical office building than a regular office building, number one. Number two, the tenant pool is much smaller. It's all doctors and medical type uses, so it's harder to get that tenant, and they're more particular about their needs and things like redundant power and having doorways that are wide if they have stretchers and light surgery. So you would think that the cap rate would then be higher for a medical office building than it would be for a suburban office building. And until about 3 years ago, you would have been right. But now it's not. Now cap rates have equalized because operational risk has gone up so much in the base office, retail, and I might add multifamily asset classes that they are now coming down in some of the alternatives as private equity capital has come into the space, created these terrific operating platforms. And so they now have yields that are very similar, even though they're taking on more operational risks. Yields or cap rates, very similar to the base asset class.